Traders, welcome to another weekly watch list. I am your host, The Option Addict from www.optionaddict.net. Let's go ahead and get this party started. So for those of you have been highly anticipating the release of what I have coined as Option Addict 2.0. For those of you thinking that was going to take place tonight, it's Sunday. Sorry to disappoint. However, tomorrow morning, you're going to start to see some slow changes. Now, over the last several weeks, I've been giving subtle hints that things are going to change, the game is going to change, how you learn to trade options, and how I move forward with giving my market commentary is going to vary slightly from what you're used to. And I'll have you know that it's all for the better. So that surprise is going to be saved for tomorrow morning, and as I continue to roll things out, I'll make sure to give you plenty of notice and explain things along the way. Anyway, let's start off as we always do with a little bit of market analysis, and what you're going to find across all the averages is pretty much the same thing. You apply old Mr. Fibonacci here and you can see that the markets are bumping their head across resistance. Whether it's the S&P, the Dow, the Nasdaq, the Russell, we're all finding ourselves in this same predicament. Now, this kind of goes in line with what I talked about last week in regards to this zone right through here at about 1275, right up to about 1280, 1290, right in that realm. We rallied up to that point. We're starting to pull back. And we're starting to see a lot of the trends start to change too. And we'll get to that in just a minute. This week we've got a lot of economic data coming out, most notably GDP and employment data. That's going to shake the market quite a bit. Not to mention, we're still in earnings season. So this whole volatility tale isn't going to get any better. So I do recommend that if you're having a hard time keeping with all these trades, trends are changing daily. There's a lot of shifts going on. Make sure your position sizes are small. Maybe you start to scale back into cash a little bit. I think this volatility storm is going to subside very soon. However, I don't expect any of that to change this upcoming week. Now, what I've been trying to do is I've been trying to scale down the number of trades. I don't think it's appropriate that we're following 50, 60 stocks every single week, so I kind of scaled back a little bit here. I did find an awful lot of patterns that I want to share with you, but in regards to buying the dips, selling the rips, watching for breakouts, and watching for breakdowns, you'll see that I've tuned that back quite a bit. And speaking of which, let me go ahead and throw those out at you. Alright, now getting into price patterns, I do want to go over a couple of things. Number one, First Solar is still on the map. And last week we talked about this one. I'm going to zoom in here a little bit. Up here against resistance, betting on it to go down and test the lower end. Well, that's happened. We're getting pretty close to earnings here. I know some people do have the strangle going on here. I think that's a pretty good idea. However, I think if you've waited up to this point, I think it's a bad idea. If you start buying into volatility while it's at these relative highs here, I think that's going to be pretty dang expensive. Not to mention, that's going to require the stock to have to move twice as much for you to break out with a little bit of a profit here. So, if you want to gamble, I'd go directional. I think the opportunity to get into the strangle has passed. Next, we're going to look at Green Mountain Coffee Roasters, GMCR. And I'm watching this here. Again, never mind the double price bar here. That's a little trick I like to play on you here with my charting service. But I'm watching this as kind of an inverse head and shoulders. So now that we're starting to break up above that level, volume's still kind of average here. But I'm watching this. If that does take off, we might have a chance to test the highs. Might get a little bit of a pre-earnings run here. Next, I'm going over to TNS, and this is a little bit of an illiquid stock, so maybe you just purchase some shares here. But I like the idea of the triangle, and the reason why is because if you measure this from top to bottom, we're talking about a 5-point move, and for a $20 stock, it's pretty hot. Next, Express Scripts, definite laggard of the group. But I'm looking at this here, so we've got a nice little double bottom. We've broken out of that. Volume was kind of average, and I think that's definitely been the case here lately as market participants have scaled back quite a bit. But we're outside of this. The trade's easy to manage, so I do like it here. Next is GIFI, and this was one of my favorites from last week, if you recall. The reason why I'm bringing it up again is it broke down, had earnings, it retested. You can see it rallied intraday, but it fell right back to the neckline. So what does that mean? Game on. It's right at its support line, or what I like to call my entry-exit signal. If it breaks above that, you're out. If not, you're at the bottom before it starts to fall. Next, I'm going over to APWR, A Power Energy. Never heard of the company, but I did like the pattern upon its discovery. So the symmetrical triangle here, I know you're probably going to ask about this particular price bar being outside. However, you switch over to a line chart, you see that goes away. So I like it here being based on the fact that it's a 10-point triangle for a $25 stock. It's not too bad. Next, we're going over into big lots. What looks to be a head and shoulders pattern. What we've been doing here recently via my watch list is trying to catch these particular trades right as they're forming the last shoulder. You can see we're there. It's starting to head back down towards this neckline. I wouldn't mind taking the trade here and then adding upon the breakdown. However, if you are going to take an anticipatory stance, you got to use this right here as your signal to get out. We'll call that 30. Next is MetLife. So insurance stocks are looking pretty decent. I got to mention healthcare. There's some pretty good ideas there, but this week I think you definitely got to keep your eyes out on the drugs, the pharmaceuticals, the biotechs. A lot of great trends and a lot of great setups there. You'll notice those that were on my buy the dips list. But this one here in MetLife, I'm watching this as a potential inverse head and shoulders, which means the idea stays the same. Being that we're right here on the last shoulder, if you did buy puts here, you would use this same level, we'll call it 52, to manage your risk. If it broke down, you hop out, you take the small loss. If not, if it ends up reaching its final price target, it's a pretty good risk reward. Next is ESV. This has been on the list for quite a long time, and it looks like we're just sitting right here on this neckline hoping that it breaks. So same thing. Breaks down here, you take your position, you use this as your line in the sand to exit the trade. I am going to quickly comment on the shippers, being that dry ships, there was a nice little rally in there, but it closed back within the pattern. We had a little bit of a breakdown on Thursday, and Friday we just kind of had a nice little doji to the downside of this pattern. So I didn't take the trade here because I really didn't see any significant break. But I'm watching on Monday. If prices start to roll over and we start to get a little bit of volume behind it, well, then I'm going to establish a position here to the downside. Next is energy conversion devices, ENER, and this was also a trade that I'm in that I put on the radar, and you'll see why. An anticipatory trade as a head and shoulders. If it breaks down, same story. You guys have heard it about 4 or 5 different times so far. Next, RMD, ResMed, symmetrical triangle, same thing. If you took the anticipatory stance, what I like to do is I like to catch them near support or resistance lines, which we're doing here. This particular pattern measures about 7.78 points based on the width, so watch for a breakout. It's coming. Next, we're going to look at PKX, which is old POSCO. You'll see here a nice little triangle shape forming. And we're right in the middle between support and resistance, so based on this particular price action, I'm going to wait for the break, whether it be up or down, and then establish my position accordingly. So folks, that'll conclude another watch list for me this week. The idea was short, sweet, and to the point. Got a lot of things rolling out here tomorrow morning, so I'm going to be up all night paving the way for these new editions, which I am very confident that you will enjoy. And keep in mind, these are only the first few editions of many yet to come. So get out there and hit the charts tonight. It's going to be a wild week this week, and I want you to make sure that you're doing all that you can to grab a few bucks out of it. So I wish you all a profitable week this week. And in closing, I'm the Option Addict. That's my watch list. So thanks for watching. Take care, y'all.
Notorious B.I.G. said it best. Either you sling and crack rock or you got a wicked jump shot. Nobody wants to work for it anymore. There's no honor in taking that after-school job at Mickey D's. Honor's in the dollar, kid. So I went the white boy way of slinging crack rock. I became a stockbroker.